Well, hi guys, welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka.
And I'm Yatin Mota.
Well, Yatin, the texture of the market completely changed in the second half. In fact, last hour of trade, we saw the Nifty slip below that 21,800 mark as well. Remember, we started the day on a positive note, 21,900. We were cruising above that level at one point in time, but it's the second half of the session that we saw some bit of a shakeout, and the Nifty slipped below that 21,800 mark. I think the CPSC index, Yatin, was up 4% at around somewhere around 1:30 to 2 p.m. or so, and towards the end of the session, it ended just about higher by about 1.8% or thereabouts. So, some of the PSU stocks came off their day's highs, and that also, contributed to the fall. But, the fact that volatility index has jumped quite a bit, Yatin. India VIX was up 6% today, above 15.5. So that's a cause of worry. Volatility, of course, as per market experts, is likely to continue at higher levels. But let's look at, the broad end of the markets. Mixed close. I think Nifty small cap index just about managed to hold up in the green. And if you look at the sectoral movers, autos were leading the way, of course, thanks to the run up in shares of Tata Motors. We'll be talking about that in just a bit. Aside of autos, you had pharma, metals, realty, energies. These were some of the pockets that that held out in the market. But on the flip side, banks came under pressure. Both the Nifty bank index and Nifty PSU banking index, FMCG, IT, some of the defensives were also under pressure. On the Nifty, in terms of gainers, you had, of course, Tata Motors, 5.5% uptick there. The stock hit a fresh high today, 950 rupees or thereabouts, but ended high by about 5.5% or thereabouts. Coal India, the other one that saw good gains, Sun, Cipla, BPCL, ONGC, these are some of the other gainers. On the flip side, you had UPL, of course, 10% downtick coming in there on the back of dismal set of numbers. Bajaj Twins continues to languish. Airtel ahead of numbers, HDFC Life, Grasim. But, Maruti was among the laggards, despite the fact that, some of the other auto names, in fact, the auto index was also leading from the front. But Yatin, mid-cap end of the markets, lots of action there, given the fact that, you saw the likes of Paytm continue to slide, and of course there was LIC as well that hit that 4-digit mark.
Yes, LIC, obviously there is some bit of momentum, but as you were saying, from the day's high, a lot of PSU stocks saw profit taking in the broader markets. In fact, in the month of February, typically the Nifty ends in the red. At least, this is the data since 2018. So Feb usually is a month wherein there is some bit of profit taking. It's, to be seen whether or not this time also history repeats itself, or probably, the kind of chance that, there could be some profit taking in February is looking quite high. Coming to the PSU banks, UCO Bank, IOB, all of these stocks were gaining by nearly 14-15%. UPL, on the other hand, along with Paytm, was down over 10%. In fact, Paytm, this is the third day the stock is locked in lower circuit, despite the fact that Morgan Stanley bought some shares on Friday's closing session, and today also the volumes on Paytm were nearly 75 lakh shares. Bank of India, a disappointing set of numbers. Stock was down 9%. Engineers India, Friday the numbers were reported. That time also stock was down 5%, and today also the stock witnessing profit taking down 6.5%.
Well, of course, some of the names that Yatin mentioned, of course, under severe pressure, as you mentioned, Paytm as a case in point. But on that note, let's take a look at the top stocks that are on our radar this afternoon. Of course, starting with Tata Motors, stock in top gear after a blistering set of numbers in the third quarter. Profit, margins, revenue, all of them beat street expectations. In fact, even when it comes to the JLR business, margins were above estimates. In fact, the margin guidance for FY24 has been hiked for a second time. Remember last quarter, Tata Motors had hiked the JLR margin estimate, in fact, from 6% to 8%. And this time around, they've said that the margins, in fact, margin guidance they've given, it's above 8% or so. So, of course, the JLR margin guidance hike is something that has been a key propeller of the stock. And if you look at what the company has to say, it expects performance to improve further going forward in the fourth quarter, and improving supplies at JLR is something that will aid numbers in the coming quarter as well. Company is also very confident of achieving its deleveraging plans, as well as says that it is on track to turn net cash flow positive in FY25, and brokerages, on the whole, expect further re-rating on the back of improvement in JLR, improvement in domestic business as well, and also the fact that the company has taken early lead in EVs. That's also something that could pave the way for re-rating of the stock. If you look at some of the what the brokerages are saying, Jefferies has raised target price to 1100 rupees per share. In fact, I was talking to Rajesh Palvia, technical analyst, in the morning, and he said that expect the stock to hit the 4-digit mark in the next few weeks itself. And 950 is what the stock had really topped today, in today's session. And if you look at Morgan Stanley, it has an overweight rating, target price at 1013. HSBC has a hold rating, target price at 920, and Goldman Sachs has a buy rating, target price raised to 960. So all very close to the 1000 rupee mark. But let's see in the next couple of sessions, so to say, if we can clock that level. But right now, things looking good for Tata Motors going forward.
In fact, Tata Motors crossed Maruti's market cap last week to become India's largest auto company by market capitalization. And Nandita, after the 5.5-6% move today, I think the gap has been widening. It was a very thin margin last week, but today it's almost up by nearly 6%, taking the margin higher by nearly 35,000 crores. Anyways, from auto to aviation, and today Indigo was one stock which was in focus. Brokerages, however, are underweight on the stock. In fact, Jefferies has an underweight rating on the stock with a target of 2,500. They say that despite the EBITDA increase of 65% to a level of 5,100 versus the expectation of 4,500 crores, it is unlikely that moving ahead this run rate of growth could be maintained. In fact, the company is expecting for a yield which is to be stronger moving ahead. But we have Jefferies which believe that yields could come in under pressure from the current levels. In fact, it could remain under pressure given the fact that Air India is also ramping up its overall fleet, which could impact Indigo's market share. Also, another reason to believe that why the stock could be under pressure, because there will be always an hangover of a stake sale by the Gangwal family. Now, CNBC TV18 today exclusively reported that sources have indicated regarding a block deal. Now, Gangwal family holds nearly 25% odd in Indigo. Through block deals, they can sell a lot of shares. Feb 13th is when the 150-day lock-in opens versus the last block deal, and probably post that the Gangwal family is expected to liquidate stake, which could likely put pressure on the stock of Indigo. So, because of these reasons, probably brokerages are remaining underweight on the shares of Indigo, despite the fact that Q3 was a stellar quarter.
Right, Q3 was a stellar quarter, and it was the 5th straight quarter of profit, right, for Indigo. And of course, it's the yield pressure, and of course stake sale by promoter that could be an overhang for the stock going forward. But the other stock on my list, Yatin, is UPL, 10% downtick. And of course this stock, whenever we talk about it, the stock has either hit a fresh 52-week low or is languishing in trade. So it's nothing new, but the earnings were so dismal, and the stock, of course, reacting to that. In fact, the stock fell to a 3-year low today. And because of course Q3 loss was somewhere around 1200 crore rupees vis-a-vis a profit in the same quarter last year. Revenues down 28%. In fact, margins have taken the most hit, 4% versus 22% in the same quarter last year. Now, the fall in the revenue has been attributed to a sharp slump in sales that was witnessed across key markets. In fact, aside of the rest of the world, you've seen a drop in sales from ranging between 20% to 64% in India as well as North America respectively. Rest of the world market grew by 12% on a year-on-year basis. And the continued pressure in pricing, higher discounts, forex losses, these are some of the factors that led to a sharp erosion in the margins. Of course, as I mentioned, 4% vis-a-vis 22%. And going by the weak demand environment, the company expects pressure to persist in the coming quarters. Earlier, the company was expecting a turnaround in the second half of the current fiscal, but now it only expects a turnaround in the second quarter of FY25. Now, this has come as some bit of bad news, and of course the stock has reacted to it. Now, if you look at what the brokerages are saying, Jefferies has maintained a buy call, target price at 635. It has cut EPS estimate by 13 to 15%, and of course it is expecting losses in FY24 and coming quarter, of course, as the management has already indicated that there will be pressure in earnings for Q4. And demand recovery and inventory liquidation, these are the two factors that could lead to some bit of re-rating according to Jefferies. Aside of that, DAM Capital has downgraded the counter target price at 462, and realizations continue to be under significant pressure. That is something DAM Capital has pointed out. But there's one brokerage that has taken a contrarian view, that's Incred. It has upgraded the stock to add, and target price is at 694 rupees per share. It values UPL at 20 times FY26 price to earnings, and says that it is at a cusp of cycle change, and which is why it makes sense to buy the stock aggressively on dips. So that is a contrarian view coming in. But I think, Yatin, UPL is also on its way out of Nifty, if I'm not mistaken.
I think that is also one of the reasons why the stock is under pressure, down 11%. And more importantly, Nandita, last time in the conference call, the management said the second half would be slightly better. Going ahead, but that didn't happen. In fact, the Q3 results had very high losses. Inventory also, the kind of correction one was expecting to flatten out, that has accelerated, because of which there has been unexpected loss for UPL. Unexpected in the sense that nobody was expecting 1,000-1,200 crore kind of a loss. And yes, as you were mentioning, Nifty is also one index wherein UPL could be eliminated, with entry being given to stocks like BPCL or others, wherein it will be very speculative, but Shriram Finance is also one of the key contenders.
I think, of course, the stock of UPL languishing in trade, a 3-year low is where it's at. But of course, that kind of wraps up our stock segment, the stocks that were on our radar. We've already discussed that at length. But of course, if you have any queries, comments to make, leave them in the comment section below. And of course, keep following Moneycontrol for all the latest on financial news as well as other news. But of course, from Yatin and me, it's a goodbye for now. But you guys stay tuned, and of course come back and join us at 8:30 in the morning tomorrow with Morning Trade. Thanks a lot. Stay tuned.